UK property prices are on the rise. Hey everybody, it's Chris Peel here from Property Abundance, and in this video we're going to talk about house prices because there is change coming. There is change in the market. It started, hopefully it's the start of something good. But what has actually happened? Well, we're seeing house prices tick up for the first time in forever. And this is all driven by... Hey everybody, it's Chris here from Property Abundance. And this week, we've got some interesting property news out today, in fact, from the Equity Release Council, which has announced that UK equities have hit an all-time high of £5.7 trillion. So if you've got a bit of spare change around and you're looking to buy the whole of the UK, it's just going to cost you £5.7 trillion. Now, what does that actually mean? Well, this is equity. This isn't accounting for debt, but this is the equity, the actual value of the house that's owned by private individuals or institutions that is sitting in UK property stock right now, and it's hit this new all-time high. What does that mean? How does that happen? Well, it's mainly due to the fact that house prices have started to climb again. In fact, Nationwide just came out and said that over the last 12 months, year on year, we've had a 2.2% average house price rise over the UK, with the boroughs, with the counties performing better than the southeast, as usual. So if you're in the West Midlands, where I am, I'm just outside Warwickshire, just outside Warwick, or if you're based anywhere else in the country other than the southeast, you'll have had above average rises, with the southeast dragging the average down, where they're kind of sitting in the 1% territory. However, regardless, we are seeing increases in house prices, which is fantastic news for homeowners, fantastic news for investors as well. Now, why has this happened? Why have we suddenly seen this change of fortunes for the property price index? Well, this is because interest rates are starting to come back down. In fact, the Bank of England recently made their first reduction of the base rate in well over 2 years. In fact, it's been climbing pretty consistently for the last 2.5 years now. And now we've had our first reduction on the 1st of August, taking the base rate from 5.25% to 5%. Now, again, look, that's not a huge difference. It's 0.25%. But the reason the markets are excited, the reason property prices have kind of come back up as a result, is because of the signals that it sends, the trend in the market, the direction of travel. And, prediction here, and again, I'm always hesitant to make predictions because you look like an idiot when you're putting it online and then a year later someone goes, see, I told you you're wrong. But here, look, I'm going to put my skin in the game here. I think this is the start of something. I think this is going to be a trend down. I don't think we'll see interest rates return to the same levels that we got used to, where the base rate was like 0.25%. However, I think this is a reduction, and I think there will be further reductions simply because inflation is so well kind of contained now. We are back in the 2% territory, which is where the government target sits. So happy days on that score. Now, that's good, and that's driving growth. However, there is another piece of news out from UK Finance, which has said that over the next half year, as in the back half of this year, the remainder of 2024, 700,000 mortgages that are on historic low fixed prices are due to expire. Now that means that 700,000 mortgages will have to find new mortgages. And if they've been used to paying 1 to 2% on their mortgage, and all of a sudden they're going to be finding mortgage rates of 5.5% and above, then this is going to be a problem. Because they're going to, you've got a lot of people that buy houses that they can't really afford. Okay, there's a big tendency for people to spend above their means. Now, if you can only just afford to buy a property when you've got historically low interest rates, well, when those rates suddenly double or triple, well, then you really can't afford that house. So you've got a lot of people that are going to be having their mortgage expire and then not able to sustain future mortgage payments because they're just at a rate that they can't sustain. So what does that mean for us as investors? How should we react to these market changes? What am I doing within my own business to react to this stuff? Well, as it has been for the last 2 years, the primary way we're trying to find deals at the moment is not through estate agents. It's not through looking online, shopping on Rightmove. It's through direct marketing. It's finding the people who want to sell their houses directly and negotiating good deals. Because if somebody all of a sudden is facing a repossession on their house because they can't keep up with their mortgage payments, that person is very incentivized to sell that house quickly. And that's where coming in and offering a solution where you can buy a house quickly and offering them a way, avoiding repossession from the banks, is a really strong approach, and it can allow you to negotiate some really good deals on your acquisitions. Now, anything you can get below market value is immediate profit. It is a saying in property, you make your profit when you buy. Okay, because that is immediately, if I find something that's worth 300,000 and we pay 250 for it, the moment I buy it, I've made 50 grand of equity. So focusing on private acquisitions, private sales is a really great way to find the absolute best deals, because it is an off-market deal. It's not affected by market forces like something that's listed on Rightmove is. Although saying that, there are still some deals to be had on Rightmove. We're buying a house up in Coventry at the moment that we got a pretty good price on, and that was on Rightmove, because there's just less buyers around at the moment because property prices have been fairly flat for a while. So what's the strategy you should be using? Well, we've talked about how you find the deal. What should you do with it? Well, again, right now, my focus when buying houses, looking at asset acquisition and asset wealth growth, is using the buy, refurbish, refinance strategy. We are focused on buying property, adding as much value to it as we possibly can that costs less to add the value than the value it creates. And then if we don't add enough value, we flip it, we sell it, we pocket the profit. If we add enough value that we can pull enough equity back out that we can use then for our next acquisition, then we refinance it onto a mortgage product, long-term finance, and we turn it into either an HMO or a serviced apartment, our high cash flow application strategies. Now, if you want to learn more about this stuff, I have got my free ebook down in the description down below. And in that ebook, it documents my journey from the corporate world and living a corporate lifestyle into the world of property investing, and then how I grew my business to over £2 million in the first 2 years, and how you can do exactly the same. Grab that in the link down below, and I'll see you on the next video. Take care.